Hi, I'm Max Keiser. This is the Keiser Report. You know, our esteemed chairman of the Federal Reserve Bank, he's out there in Washington, D.C., yappy, testifying. You know, all he's got to do is print. Just shut up and print. That's all he's got to keep. Just shut up and print. Stacy.
I need a sock puppet for this. Plucky won't do, of course. It needs more than that. Well, you know what? Earlier this week, Fed Chair Powell warns of significant uncertainty about the recovery and says small business is at risk. Of course, you and I have been covering the fact that, you know, he's directly responsible for this erosion of price discovery, of, you know, free speech, essentially. He's like the tyrant of the markets. He doesn't allow free speech, free price discovery, free markets.
That's absolutely right. He is censoring the machinations of capitalism, which weeds out the weak hands and gives us only the winners so that we may become glorious in our quest to dominate the global economy. But because of the printing that's going on and the bailing out of the weak hands, the weakest amongst us in corporate America, what happens is the vibrant new small to medium enterprises are pushed aside. They don't have access to credit. And the worst, the behemoths, the albatross, the no-goodniks are flooded with cash to do more bad things.
Exactly. So here he is warning that small business is going to be doomed. Of course, investors love that because just like Warren Buffett, he likes moats. He likes oligopolies. He only invests in those. Like if you could force the price, if you could fix the price at whatever, you know, the highest profit margin, Warren Buffett loves that. Zombie companies may soon represent 20% of U.S. firms. This is a chart showing the percentage of U.S. zombie firms who are unable to meet their present interest payments from their actual earnings. Zombie companies destroy the economy in the long term. So everything is about the short term right now. As we, you know, it becomes shorter and shorter term over the past 20 years. And now we're at the point where, well, everybody's already spent the next 30 years. So that's why we're at this collision course between Generation Z and the boomers. And where it goes, we don't know.
Right. Well, this statistic referring to zombie companies is very telling. You know, it's really the pictorial graphic representation of something we've been saying on this show, or I've been saying on this show for some time now, is that money printing doesn't cause a rebound in inflation. It, in fact, causes deflation. And you have no statistic that proves that more than the rise of zombie companies, right? This is why money printing doesn't fight deflation. It causes deflation because you're pouring money into companies that are zombies, that have an inability to function as ongoing enterprises. But because they are friends of the central bank, and because Steve Mnuchin and Donald Trump and all those folks in Washington believe it's strategically important to keep their donors. These are donors. That's who we're being kept alive here, are the corporate donors into Trump's campaign are being flooded with cash, even though their underlying businesses are not viable and no longer able to sustain themselves. And you end up with a zombie economy, and this is growing by leaps and bounds.
And anybody knows that in a zombie film, the zombie is the living dead. They're walking dead, right? They're dead, they're walking around, and they try to kill everybody else around them to keep themselves going. And this is the same thing that we're seeing in this so-called capitalist system. You know, I don't think they're protecting just those zombie companies. Yes, they're you know, donors, but there must be the underlying derivatives, which are many, many times bigger. So many, many more corpses there than there are in that real economy. But we have the zombie companies, so it makes perfect sense that we have zombie investors as well. You will almost certainly lose all your money if you buy our stock. Hertz tells prospective new equity investors. Yes, 5 times in their prospectus for these new share offerings, they said, you will lose money. It will go to zero. You are about to lose everything. And the Walking Dead, the zombie investors on Robinhood were like, give me your bad shares.
Right, they're cannibals. They'd like to eat on the carrion of dead equity. It's like betting on which end of the Titanic will sink first if you're buying Hertz stock. The whole ship is sinking. but you're making a bet as to which one which end will end up in the water first. I mean, this is worse than going to a casino, because at a casino you have a very small chance at winning. When you're involved in the Hertz float of this zombie stock offering, you have zero chance of winning. It's worse than casino economy. It's worse than buying a lottery ticket. It's the most egregious example of blatant captured regulators who are essentially distorting the economy so that you make the point, or you ask the question, well, it's not just the donors. No, it's not just the donors, because behind the donors are the banks. This is all about bailing out the banks on Wall Street. And why? Because they are the biggest contributors and owners of the Fed. The Fed is bailing itself out. The Fed owns all these stocks. The Fed has all these loans. The Fed owns all these bonds. When it prints money and keeps zombie companies alive, it's to keep itself alive. It's printing money for itself. And by the way, who's a huge shareholder in all this nightmare? Jay Powell. Jay Powell's bailing himself out. Why can't people who are underwater on their mortgages, who have just been laid off in America, simply print money to bail themselves out, like Jay Powell is printing money to bail himself out? That's not right, is it?
I thought you were in the position to start going,
Right, he's just brring. Hi, it's Jay Powell. I need to bail out myself. Brring. Print the money all day long to bail out myself because I'm a crook. Right, and meanwhile, Ben Bernanke, the previous Fed chairman, is over at Citadel.
Yes, we're going to get to Citadel, because that is, of course, part of this Hertz story. It emerged, the data is coming out about just how much Robinhood, the app, is giving away these free trading, but the free trading actually costs a lot, i.e. they're selling their data, the flow, they're selling that information to high-frequency traders, and the number one company they're selling it to is Citadel, where Ben Bernanke works. So that would seem like on the surface it looks pretty dodgy.
So on the topic of dodgy, corrupt central bankers like Jay Powell, there's Ben Bernanke, the guy who was sitting in the chair before Jay Powell over at Citadel, a big hedge fund run by Ken Griffith, who just bought an apartment in Manhattan for $250 million with the money that got printed by Ben Bernanke. And he gets given the trades on Robinhood before they hit the floor. Before the trades are hit the floor, the exchange to be executed, Ben Bernanke looks at the Robinhood traders and he sees, oh my God, these idiots are buying Hertz. So he puts an order in before they do. They flood the market with their orders. Price moves up and he's out. So he's scalping the Robinhood traders. He's stealing from them. He's like sticking a hose in the gas tank and siphoning gas out of the neighbor's car. He's a larcenistic pilfer.
And just so you understand, Max Keiser has a patent on a virtual specialist technology, and Citadel, all these derivatives traders, all the high-frequency traders, JP Morgan, BlackRock, which is now managing this bailout fund for the Fed, all of those companies have their own patents that rest on top of Max's patent. You could see the references if you go to the Google patent online. What's your patent number?
5950176.
And so this is the expertise they're building on that Max created.
Right. Well, I feel like Robert Oppenheimer, who created the atomic bomb and then regretted it. I created the virtual specialist technology to thwart market manipulation, to create this fairest exchange in the world, the Hollywood Stock Exchange. But it fell into the hands of Wall Street, and now it's used to rip people off. And I'm very sad about that.
Talking about ripping people off, we have another headline about how much private equity costs, mostly to the pension fund industry. But first, we'll talk about CalPERS, which is the biggest pension fund in the world, certainly in America. It's for public sector in California. And CalPERS, the biggest U.S. public pension, is considering boosting leverage to as high as 20% of the value of the fund, or nearly $80 billion, based on current assets, in order to achieve its 7% annual returns target. So this is Jay Powell, this is Janet Yellen, this is Ben Bernanke, and this is Alan Greenspan. They caused this situation of allowing the pile of fraudulent debt, the black hole of debt that causes the inflation that they keep on printing money to throw into. They've caused these, this is the next risk. This is where the risk has been transferred. Because remember, the tyrant in the central bank, that they don't want price discovery, what they're trying to do is to prevent anybody from understanding the risk they're taking. Well, the risk doesn't disappear. It disappears off of Citadel's balance sheet, perhaps, but is put here in these balance sheets of the pension funds.
Right, absolutely. This public pension fund CalPERS, long-term toxic risk dump. I remember when I was on Wall Street, working for a big firm on Wall Street, a lot of times firms make mistakes, right? You take down a big order, take down a big trade, and somebody messed up the order, and suddenly, you've got a $5 million loss or $20 million loss or a $50 million loss. And so the firm is on the hook for that money. Now, I personally have seen executives at big Wall Street firms call up the pension manager at a big firm like CalPERS and dump that loser, guaranteed loser, into that fund. And that's the job of the pension manager at a place like CalPERS, is to be compliant in a fraud of being a toxic risk dump. And so now they're saying, our returns are terrible. Well, yeah, they're terrible because you don't have access to winning trades. You're only given the losing trades. Oh, so you're going to leverage up the fund to try to make up for it. That's a Wall Street remedy. They're going to triple down on the fraud.
And, we're going to get to this next headline, but just Google out there, Google CalPERS, Bear Stearns, CDOs, credit default obligations.
Collateralized debt obligations, right? So CalPERS during that period of
2008.
So read that, and you can see where risk goes to die.
Again, risk dies in your pension fund, dies in your municipality, dies where it's going to harm the most people, right? Spread out across the peasantry, away from the top 0.1%. And this really is a staggering statistic. Investors paid $230 billion in performance fees over a 10-year period for returns that could have been matched by an inexpensive tracker fund costing just a few basis points. So that is private equity was handed all this money, mostly by pension funds like CalPERS, and they took $230 billion in fees, and they did not outperform just buying a simple index that costs a fraction of a percent.
Right, it's an enormous scam, the private equity industry, as is the hedge fund industry. Hedge funds very rarely outperform the market in any consistent way, and even Warren Buffett has failed to outperform the market for 15 years. Private equity always is a huge dump of fees, but they have great marketing, and they're out there in the Hamptons amongst people that don't know anything about anything really, and they get them to put millions of dollars into this great private equity fund. Mitt Romney, over there at Bain Capital, hell, we make a lot of money for folks. Well, no, Mitt, actually you don't, and it's a giant scam.
Well, all our presidents, all our former Treasury secretaries, all our Federal Reserve chairmen, they all work at private equity or hedge funds, and
right. The presidency is just a way to get something on your resume so that you can leave and then do something like productive in your life. All right. Well, we're going to take a break. And when we come back, much more coming your way. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Stephen Cole. He's at Bitcoin. He's an investor. Stephen Cole, welcome to the Keiser Report.
Hey, welcome, Max. Thanks for having me.
So let's discuss inflation and war. So one of your recent quotes is that Bitcoin lets you legally opt out of the inflation tax. Can you elaborate on this? Which war? What inflation? Stephen.
Absolutely. The endless war that is all around us all the time that we've gotten way too used to. There was once a time when going to war was a big deal, and it was voted on and taken very seriously. And now we live in an age in which that's unfortunately not the case. We're kind of bleeding trillions every year, maintaining these presences for better or worse overseas, fighting a lot of fights, and in some cases maybe going on a national offense. So what that means for individuals in the country is that your savings are often used to fund these wars and these government programs. And often that happens in ways that most people don't understand. So rather than the government having to go to citizens and say, hey, we want to fund this institution, go on this campaign, provide this social service, whatever it is, whether it's good or bad, that should be a conversation. It shouldn't be that the government is able to quietly, hidden behind complicated jargon, be able to steal the value from people who are trying to save money. So if you have dollars in a savings account, the central banks printed a lot of dollars in the last few weeks. Somewhere in the range of $3.5 trillion were created out of thin air in recent weeks. And that dilutes the value of your savings. Doesn't necessarily happen instantly. Takes time, got to trickle through the system, a lot of complicated supply and demand. But eventually, if you increase the supply of an asset, there is no escaping from the effect of that on holders of that asset. And unfortunately, many people are paying an inflation tax today in the US and in virtually every country, and they don't realize it because the government doesn't talk about it and doesn't frame it that way. But if you hold your wealth in something like Bitcoin that is scarce, that they cannot print more of, then you effectively opt out of that tax, and doing so is legal.
You know, a lot of people are calling for defunding the police. You're saying why stop there? Why not defund the Pentagon, right? The Pentagon is $1.5 to $1.6 trillion of our taxes money. It's over half the taxes are out to the Pentagon, and they start wars without any approval, and it's seemingly wars of convenience, as they're known, simply to keep the defense contractors, flush, right? There's no point to it. Other than profiteering. And so with Bitcoin, it's a way to defund the Pentagon. And, I see a lot of kind of a spinoff from Black Lives Matter now. You've got several groups in the Black community saying, we can opt out of the American system completely with Bitcoin. Are they right?
They are right. They're absolutely right. You can, for the first time in our lifetimes, there is a practical way to opt out and escape from underneath that system. Back in the 1930s, gold has been the soundest money that man has had for the last few thousands of years. And back in the 1930s, the governments made it illegal to own gold to maintain their violent monopoly over the monetary supply. So FDR issued Executive Order 6102 and said, anyone holding gold, you have to give that to the government. Here's how much money we'll give you for it. It's not a conversation. And Bitcoin has many strengths that make it resistant to that same type of central control and that same type of attack vector. Governments cannot easily use physical violence in the same way that they can with assets like gold to force you to hand them over. If they want your value, the wealth that you've created through your hard work and time and effort, and you hold that in Bitcoin, they have to come ask you for it. And it sounds small, but that is a game changer.
So Bitcoin is effectively unconfiscatable as well as being indestructible and uncensorable, which is also very important on the geopolitical stage where the dollar is used as a weapon. The U.S. employs sanctions or they'll censor the SWIFT network for transferring dollars all around the world and using the dollar politically. Now, another big kind of interesting division that's opened up in society right now is an intergenerational division. So you've got the boomers versus the millennials, right? The boomers are really trying to hold on to the status quo. The millennials are saying, wait a minute, you took all the money, boomers, and you gave us all the debt, all the student debt, all this other debt. And this, again, is an interesting way for millennials to do battle with the boomers because they can defund the boomers. Your thoughts?
Agree very much. I think that's one of many examples of specific sectors of society waking up to the realization that their futures have kind of been decided for them. They've been signed up for these debts and these obligations in ways that they did not have autonomy over, and it wasn't a conscious decision on their part. And so as a practical way to kind of make that a conversation, take back some of that power and that leverage, they can opt into Bitcoin. And that's true for, maybe if millennials and the younger generation who are already more comfortable in the digital realm anyway, more naturally amenable to digital assets like Bitcoin, I do see that as a huge trend in kind of them starting to and will continue to a greater degree to reclaim some of that leverage in the discussion and say, hey, I know that you said I'm signed up for this, but let's talk about it because I've got this Bitcoin thing and you can't just take it from me.
Speaking of defunding, how about defunding mainstream financial press? We live in an era where Hertz, remarkably, bankrupt companies trying to float $1 billion worth of stock, and Chesapeake Energy, another bankrupt company, is become embraced by day traders on various stock trading apps. And the mainstream media, in particular when it comes to Hertz, this is obviously a fraudulent move on the part of Hertz. I worked on Wall Street for many years. This is fraud. They're selling bogus, worthless paper, hoping to go directly into the pockets of the creditors. But at the same time, this is coming at the tail end of the 2017 period where we saw in the so-called crypto space the flotation of a lot of ICOs that were patently worthless. But there was this huge multi-billion-dollar market for them. It's almost as if Wall Street looked at the ICO market and said, hey, ICO, all that fraud taking place on your market, hold my beer. We're going to commit even more fraud. How much longer can this go on? Particularly, is the altcoin space, the mania of 2017, is it dead now finally?
Great question. I worry that there might be another wave. Long term, I think altcoins are worthless. I don't think there's any promise in any digital asset that I have seen except for Bitcoin. 2017 was a mania. You're right. I think that unfortunately, a lot of the mainstream and institutional money considered Bitcoin guilty by association. They have it lumped into the same bucket of digital assets as these ICO things, and they don't understand the difference. With Bitcoin's decentralization, the fact that it is immutable, that no one can change its monetary policy, not developers, not miners, not any single portion of the ecosystem, makes it a very different value proposition from any of the many altcoins. I do worry, however, that it will take a lot of time. We are still so early in this entire digital asset movement that it will take a long time for that knowledge to dissipate. And who knows, maybe there's a second wave of retail money coming in looking for the next Bitcoin, which I think is a lot like looking for the next internet. But I think as people who understand Bitcoin, we have a responsibility to those in our lives as we educate others, making it clear why Bitcoin is different and why Bitcoin is special can hopefully help others avoid the pitfalls of the 2017 ICOs, the rampant fraud in all of the media.
The altcoins that came in after Bitcoin, that's trying to kind of cash in on Bitcoin, but with pyrite, fake gold, basically. And then another generation on top of that came along called distributed finance, which seems like even another layer of fraud on top of fraud. Can you explain to me, in the distributed finance world, when they talk about a trusted price oracle, how that's not just centralization? And are they completely off base there?
No, you're absolutely right. In my opinion, it's complexity theater. And oftentimes I think that the hearts are in a good place in some of these projects. Some are outright blatant scams done by scammers, and that's kind of the worst end of the spectrum. I do think that there are some well-intentioned people who are brilliant in terms of technology, and they're trying with a good heart to apply it to solve these problems. But I worry that in many cases, when you connect enough dots through all of the layers of complexity, such as price oracles, you ultimately get to a place where at the end of the day, you are still relying on a small group of individuals, corporations, entities that could be they could be malicious actors, they could be blackmailed, they could make mistakes, be subject to human error. At the end of the day, if you connect enough dots, I think it does lead back to centralization in many of those projects. So I think that some of the use cases being explored on top of altcoins, maybe they are noble use cases, maybe they are valid use cases, but over time, I see those migrating over to the security and immutability that you get by virtue of building on top of Bitcoin, having all of that proof of work and unforgeable costliness in Bitcoin's base layer to build on top of.
Right. I love that phrase there, complexity theater, right? That's really interesting. Getting back to Bitcoin now. So one of the core value propositions, something that's not talked about enough, is that for the first time in history, we're separating state from money, right? Up until Bitcoin, this was not only, it was considered impossible, basically. But now it is possible. And it has such a profound impact on society at large all over the world. And there is talk about Bitcoin replacing the dollar as world reserve currency, which the timing seems good because world reserve currencies usually last about 100 years. So the time, the US dollar's time is up. Do you see Bitcoin becoming kind of this world reserve currency and kind of ushering in a whole new era of stateless money?
I do indeed. I think Bitcoin is going to destroy fiat currencies. The dollar is the strongest fiat currency, but I think ultimately the fact that Bitcoin exists makes the whole nation state paradigm, including all of the fiat money associated with it, unsustainable and impractical. They cannot escape the gravity of Bitcoin's strengths as the strongest money we've ever known.
Awesome. Stephen Cole, thanks so much for being on Keiser Report.
Thanks for having me.
And that's what's going to do it for this edition of Keiser Report with me, Max Keiser, and Stacy Herbert. I'd like to thank our guest, Stephen Cole. If you want to catch us on Twitter, it's Keiser Report. Until next time, bye, y'all.